In this video, learn the key variable that can cause massive moves in stocks. Hi, I'm Mike Bellafiore, co-founder of SWBI Capital, and we're a proprietary trading firm located in Midtown Manhattan, and I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, our proprietary trading firm shows in step-by-step detail how to spot and trade a stock ready to potentially see huge gains. Let's get to work on sharing these important trading lessons so you can grow your trading account.
Hi, so my name's Yanni, and this is a second day play that I made on SWBI. So the trade strategy is to find a stock that's in play, that has an R-vol above 2, has a strong extended hours gap that is holding above yesterday's high, a clear pre-market range with a psychological level. The breakout must be a fast breakout above that important level, and it must show strength off the open.
Yanni, so this is a second day play, right?
Mm-hmm.
What are the parameters on day one that get you interested for day two? So you say here that you wanted holding above yesterday's high. I would imagine that you also need variables for day one.
Mm-hmm. Okay, so I'll make sure I touch upon those variables on day one next time I present. But ideally, I just want to have a strong stock that was in play on day one, that moved a few ATRs and had elevated R-vol that day.
Okay, yep, that's super important, right?
Yeah.
To explain to the younger guys, so a day two play means on day one we saw something unique based on price action, based on volume that gets us interested. So, and there was probably a catalyst, either a news catalyst or a technical catalyst from day one. Stock had a very big move on day one, and our thesis is, well, since it had such a big move on day one, and because there was probably a catalyst behind it, that there's going to be a continuation of the move, because big money players don't just stop buying or selling for just one day. They've got big orders. It takes them a while to fill. It can take 1, 2, 3 days. And so that extraordinary move on day one can give us evidence that there's going to be follow through on day two. And that's what we're looking for.
Yep, exactly. So some more variables I look for are option flow with out-of-the-money strikes, more than a 3-to-1 risk reward. And I would like to scalp a core, but leave runners as a trade to hold for this setup.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So I also look at the previous quarters to see, so this stock reported earnings on day one. Something I look for on day two is if there is continuation the last few quarters. So as you can see in this back test, that we actually had a few quarters where in the following days and weeks that this stock could trend. So that's something important to highlight.
Okay, let's go over that. I love this. So let's go in a little bit more detail as to what you're back testing for and what your back testing is telling you.
Exactly. So we're back testing the earnings moves after they report. So I highlighted this red box right here after earnings. And you can see last earnings, not including this earnings, the quarter that they reported in March, they moved 12% on day two. So
is this just for this stock?
Yes, for this stock.
Gotcha. Okay, good. What else are we seeing here?
Yeah, so we see that on day 1 and 2, there is continuation, and with the following weeks to come, that this stock could trend. And also our opening gap on day 1 has a certain pattern that if we gap up more than 3 or 4%, then we have a higher chance of continuing the next few days.
Yeah, what's interesting there is that it's not just moving on day 1 and day 2, but it's also moving on day 3.
Mm-hmm. Yeah.
Look, the reason why we look at second day plays is because we're looking for stocks that are going to be directional over multiple days. Our thesis is there's a catalyst in this stock, there's big orders to be filled, and what we learned from day one can help us on day two. And so not only are we seeing big moves on day two, but we're seeing big moves on day three, which is really just confirming even more our thesis that there are big orders in on the stock or stocks like it.
Mm-hmm. Exactly.
So when you do this back test and you see that there is likely to be follow through on day two when there's movement on day one, is that giving you more confidence? How are you using that information?
Well, it's another variable in the trade, that could be another reason why you put on more risk in this certain trade and be more confident in holding for a bigger move.
Cool. And how long did it take you to do the back test?
Oh, this was instant. I used the third party. I could just type in a ticker and it tells me the previous quarter, so it was pretty fast. So here are my potential reasons to sell. In my favor, if the price target is reached, I'll definitely take off that position. And if it goes against me, I look for an intraday uptrend to be broken, or I can't hold a technical level, or if it just can't hold above VWAP. And I also use a number of moving averages, so the 1 hour, 5 and 10 day I use, and also the 1 hour and daily Bollinger Bands as a trailing stop. Or if there's just breaking news in the stock or in the market, or if we see an unusual seller on the tape. So the trading plan is to buy the breakout over the technical level at 2365. We have a stop loss at 2315, and the targets are 2450, 2535, and 26. We want to scale out into strength and leave runners until there's reasons to sell.
Okay, so Yanni, I take it your technical level 2365 is it just the high from day one?
It's also the high from day one, but there is also multiple rejections in previous years. So I'll show some charts in a second, but this was a very important technical level.
So that's excellent. And that's an excellent distinction you're making right there. I mean, pattern one could be day one, there was a high of 2365. Pattern two can be day one, there was a resistance level of 2365, and on our longer term charts, on our longer term charts, there's significant resistance at this 2365 level as well. For instance, AMC, we're all taking a look at that, huge resistance level that everybody's sort of looking at 60. And so not every technical resistance level is created equal. So you want to get in the habit of judging how important that technical level is, and if it gets above that technical level, and that technical level is more important, and it's getting above there on some pretty good volume, I'm going to be more aggressive getting long that than if it was, just that pattern one, day one, 2365 is a resistance level, as compared to pattern two, which is day one, 2365 is resistance, end, it's a resistance level on our longer term charts. That's a much more significant clearing of that resistance level. And as a result, I'm going to have to trade differently.
So here's the bigger picture with the overall market. We had Yellen and Powell attending a meeting with Biden. And there has been a shift in the Fed's longer-term forecast when it comes to consumer prices, driven by demand for goods and services. There are supply shortages in several sectors, and at the same time, job growth has been slower than expected, even though job openings have hit highest level on record. So this has caused speculators to take off risk in inflation-driven names such as energy stocks, utilities, financials, and rotate that back into technology and growth. So as you can see in this SPY chart, we did get a gap down that day, and we were seeing some pretty big weakness from like the Dow Industrials, for example, and also those specific sectors. This day, SPY had a 415 and 416 range that was super important, and if we didn't hold that level, we would continue lower most likely. But as you can see with this chart, that in the past, SPY has been bouncing off the 50-day moving average as well as the daily Bollinger Band. So the possibility that this dip would have been bought is pretty likely, considering where we are in we're in such a big bull market. So holding that 416, 415 range was super important this day. So I wasn't too sure which sector to look at for Smith & Wesson. This is a gun manufacturer. So I was just looking at similar companies when it comes to firearms, outdoors stocks, and ammunition stocks. So here are just a few names that I did some research on, and overall they look pretty strong on their daily charts. They've been breaking out of ranges and trending higher. So here's a long-term technicals for SWBI. As you can see that we have resistance all the way from 2016. So this was a super important level with multiple rejections on the daily chart. So here's our 1 hour. We get that really big up move on day one after they reported earnings. It rejected that 2365 level intraday, and then our second day we broke through that level with massive volume, and I highlighted the areas of resistance that were potential reasons to sell. And here's our 5 minute, trending above view up on day one, super strong, and then day two, same thing, trending above moving averages and view up. So here are intraday fundamentals. They reported earnings of 170 a share. Sales were better than expected and expanded its gross margins from 45.1% to 32% a year ago. Increased its dividend by 60% to 8 cents a share, and also authorized a $50 million share repurchase program. And some things to note that there is a record growth of 42% of firearm growth in the United States. And also the Democrats were preparing to vote on a scaled down gun bill, scaling back the background checks for firearm buyers. So this is pretty bullish sentiment around their earnings and around the firearm space. And here is our statistics on day two.
So. Let's slow down here and particularly spend some time on this for our ambitious interns, because this is a great learning lesson. Is there anything that sticks out to you from the intraday fundamentals that you really don't see very often?
Increasing its dividend and also buying back shares. Like, we see a lot of companies beating earnings. That's not something too crazy, but these two particular points are very important for this setup.
Okay, so there are going to be some people who buy stock and actually have to buy stock when dividends are increased. And I do think that's a factor, but that's not the main driver for the order flow here. Well, what's super unusual about the earnings that we need to point out for the ambitious interns?
I would say expanding its gross margins from 45% to 32% from a year ago. That's also really important.
I would think so.
Yeah, very important.
And you know, when you read that to me, my first reaction was to say, how did they do that? How did they do that? You know, this is an old business. They make guns. They make they make ammunition. How did they do that? So one of the things that's great about being at a prop firm is that we get access to all the research. When I would see something like that, I'd sneak into my inbox and I'd go find somebody who would explain to me why those gross margins went up so much. I'm sure there's a research note or two that we can get from some of the better analysts to at least explain that to us. And then, you know, it is certainly important that there's record growth of 42% in the U.S. firearms market. Now, I would suspect that historically tends to be temporary. So when there's threats of legislation coming, people go out and buy a bunch of guns. because they feel like, hey, this might be my last time to be able to buy guns under these regulations. So you'll see that definitely happens. You'll see that when Republicans are replaced by Democrats. You'll see that when gun legislation hits the floor of the House or the Senate and it gets more likely to pass. You'll see that particularly for assault weapons. But I think that expansion of gross margins is really the driver here. And when we see that again for another earnings play, we want to keep note of that can be something that causes people to really buy and buy for multiple days.
Okay, got it. Thank you.
Yep, and just gross margins means, hey, they sell things and they're able to make more money selling things. That's great for your business. I used to make $10 when I'd sold something. Now I'm making $13 when I'm selling something. Obviously, that's better for my company. And that makes, and then companies tend to be scalable. So just think about every time I sell something, I'm making more money. The street loves that for any company. Yep, and for the ambitious interns, anytime you see improved gross margins, stop what you're doing. That is a stock to think about trading. That's a stock that's got to go on the top 5 of your ideas during a particular AM. Maybe there's some other reasons why you won't trade it, but that's got to be given careful consideration as to one of the stocks you might want to trade.
And here are just some of the statistics for the day one. Something to note also, which kind of surprised me, was the short float was 9.7%. I thought it'd be a little lower, but it's in a pretty good spot that I like to trade. Not too high, not too low. So here's a variable checklist that pretty much met all of the variables. And also something I like to look at is order flow when it comes to options. So here's a screenshot of the out of the money call options that we saw on day one and day two. So that's something I look for as well.
Yeah, and not making a political statement at all here. I would just say that if you go back to the last slide, I would suspect that the short interest went up when there was a change at the executive level from Republican to Democrat, and when there was a change in the Senate to Democrat. Now there is more of a chance that there's going to be gun legislation than there was under the previous administration and under the previous Senate leadership. So I just would guess, I would suspect, you can go back and check it, that short interest has gone up after the election.
So here is my trade management. I took the 2365 breakout. Like we talked about, that was a very important level. So once we got volume above that level, got long and sold 40% of my position into tier 1, another 40% into tier 2. Sold another 10% when we got a really nice up move intraday, and this was around like 11 o'clock. So when I see that, I like to take sharp up moves off just a little bit, 10%. And then when we got that trend line break right here, I caught my runners. So I'm pretty happy with the execution that I got out of this trade.
Give me a rundown as to how you're thinking through why you're selling 40% at T1, 40% at T2, and 10% higher.
Well, I try to, like I talked about in one of my earlier slides, is that I want to scalp a core. So the initial tier 1 that I got 40% out, that was me scalping my core, right?
Gotcha.
But the other 40%, maybe I could hold on to a little bit longer, but that's the position that I want to like trade off of. And when I see these spike ups with high volume, like I just want to be taking off some risk. Maybe that could be a mistake and I should be holding for a longer move, but that just really fits my personality, that I want to be a little bit more nimble with my executions and scale out a little quickly.
Okay, got it.
So this is the opening drive and that breakout above that important level. So we could just watch the tape right here. It's in the right-hand side. So we get really aggressive buying above that level with size. And you could see that there are massive offers at 24 too. So when I see that on the tape, I gotta be a little bit careful and see if that's going to be a potential resistance. Or if we break that and they take that area with size, then this could continue much higher. So I think it hangs around here for a little bit. Yeah, so it can break that 24. Let me just go to the next clip. I have another slide of where it breaks 24. So assessing that 24, we aggressively take that with size around more than 10,000 shares right there above the ask. We test that 40 level. A little bit of a rejection. I'll just speed this up a little bit. So we break that 40 level aggressively, and then pretty much after this, we just trend slowly higher for the rest of the day. So what did I learn from this trade? Having variables for reasons to sell can help you stay in the trade longer. I'm more of a scalper, and I don't like holding trades past 11, but I was able to for this trade because I had a reason to sell beforehand coming into the trade. Backtesting moves to see previous earnings continuation can be a big variable in the trade, and option flow could give us clues to how aggressive a stock could trade as well. How could have done better? Being able to spot that this was an A+ trade and deserves more risk. I originally had this on my morning sheet as a B trade because my stop loss was a little wider than I wanted it to be. And I also never traded this name, so I just wanted to, I'm more of a technology trader, so like the Netflixes, Facebooks, Amazons of the world, I'm more used to. So moving to this stock made me size this down to B trade, but honestly, it's no exception that there were so many variables in this trade that this should have been A+ trade. How would you trade this differently next trade? Just be more confident taking this with size, as this is a trade that has multiple variables and lots of wind at my back. And some goals I want to touch on for our next trade is work on technology with other junior traders and interns to be able to spot this setup more often. Me and intern found this trade actually, and we communicated a little bit in real time to talk about what we see. I want to have more trades like that, you know. That gives me a lot of confidence in a trade like this where other people are looking at this trade and I see something and my trading partner sees that exact same thing, you know.
And Yanni, Kyle V, who I think you know, wrote in the chat that he's willing to help on market views for second day plays. And so he wrote, closing the top 20% or so of its range at day one might help for day two. Can build a market view around this. Yanni, happy to help with this if needed, if it comes with sharing names back and forth. So I love actually your open-mindedness to want to work with other traders, in this case an SMB trader, on technology to get better. Great idea, great thinking. And Kyle is reaching out to say he's willing to help.
That's great. I'll definitely reach out after the meeting.
So hit him up.
Of course, yeah.
Yeah, I mean, I really like the back testing. It's very well done. I really like the recognition of the technical resistance level, how important that was, and it getting above there. I like the simplicity of the trade and the use of a pattern that has some real edge, a second day play. I really like how you're willing to reach out to other traders and work with them on technology. That's really, really good. I have to say that I tend to agree with you that when a gun stock is up for thinking about trading, that our first reaction is to be like, how much can that really move? This isn't going to move like a tech stock.
Yeah.
I totally understand your thinking there, and I was actually thinking that as you were going through it. But the best trading is when we're open-minded, and when we are processing the data that's in front of us. And it just happened to be in this case that there were a couple of variables that were extraordinary in the stock. Maybe it was that the margins were so much better than people had thought. And maybe it was a little bit of the dividend. Maybe it was the clearing of that technical level that had to bring in shorts covering and longs buying. Maybe there's some more fear of legislation that we just aren't thinking about. But if we're open-minded, then we're going to see that, hey, this is not a B opportunity.
Mm-hmm.
Which you were right. You were right to think of prior to the open. That turns into an A+ trade because we're just open-minded. The best traders, I think a lot of times people feel like they have to predict what's going to happen before it actually happens. And if they don't do that, then they're not going to be able to make big trades. We see the traders who are making the best trades, just being open-minded, processing the data, letting the trades come to them. You're going to hear this from our best traders time and time and time again. You would think that because they make so much money and have done so well that they must be sitting around predicting what all these stocks are going to do. And certainly if you watched cable financial news, that's what you'd be led to believe. But for the type of trading that we do, observation trading, there's a lot of edge in observation trading if you've got skills. Being open-minded and letting these stocks letting that trade just hit you right between the eyes. You're just sitting at your desk, you're just looking for a trade, and all of a sudden, whack. You say to yourself, I got to put on a lot of risk. This is a good trade. And you do. You just wait for those moments, and you do put on that big risk. Those tend to be the best trades.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SWBI, train and trade well.